coming up this evening. Inflation still red hot. Consumer prices in December rising at the fastest pace in 4 decades. Where are gas prices going? We ask an expert. Apple shares up 7% today after reporting a record quarter. How did it manage to overcome the chip shortage? And companies pulling out all the stops to lure people back to the office. One commercial building even offering free food delivery to tenants. That and much more coming up on NTD Business. Good evening. Great to have you with us. I'm Paul Graney with NTD Business, live from New York City. Wall Street advanced today, rebounding from a sell-off to a rally in another seesaw session. The Dow rose 565 points by 1 7/10%. S&P 500 gained 105 points by 2 4/10%. And the Nasdaq today gaining 418 points, 3 1/10%. For the week, the Dow is up 1 3/10%, S&P 500 up 0.8%, and the Nasdaq pretty much flat for the week despite today's rally. Apple shares jumping today, posted record sales over the holidays, overcoming chip shortages and blowing past profit forecasts. It sold a massive $124 billion worth of product and services over a single quarter. Sales are up 11% on last year. Apple has apparently handled factory shutdowns and shipping delays better than its competitors. The company used its buying power to squeeze vendors for needed supplies. Executives say chip shortages affected mostly its older products, particularly the iPad. Growth in subscriber products, though, like music, TV, and fitness, help revenue. Shares of stock trading app Robinhood, remember GameStop, have tanked since the company's IPO last year, down 67% before today. And this morning, it looked like more of the same before the stock rallied and finished 6% higher. Its share price fell over 14% earlier in the day after posting a quarterly loss on Thursday evening. Like many tech startups, Robinhood has yet to turn a profit. Its monthly active users also declined from the previous quarter as retail investors pulled back from the market. Robinhood was at the center of the meme stock mania, GameStop, AMC stocks, remember, but that mania seemed to have cooled off. Inflation, still running at its fastest pace since 1982. That's according to the PCE index. That's a key economic indicator used by the Federal Reserve. The Bureau of Economic Analysis today estimating consumer prices rose 5.8% between December 2020 and December 2021. Energy prices climbing nearly 30%. Food prices rising almost 6%. American incomes also rose, but not as fast as prices. Now to discuss inflation, at least in the energy space, we're delighted to be joined by Tom McNulty. Tom is now the president of TJ McNulty and Company. It's a boutique advisory firm in the energy space. Tom, great to see you. Thanks for coming on.
Hey, great to see you again. Thank you.
Tom, we see big banks predicting higher prices for oil, even higher than we're seeing at the moment. I believe Bank of America predicting $120 a barrel by summer. We're at about $90 now, right? That could be pretty serious or at least substantial for American wallets and possibly for the economy, right?
Yes, energy is, as you know, a big component of CPI and PPI calculations. Sometimes it's excluded, and they do that with food also. It impacts every facet of our lives. Almost all of the banks. There's a lot of consensus in New York and in London on energy prices escalating pretty rapidly past 100. I certainly think it's possible, maybe likely, but I don't think it's sustainable. I do have, there are reasons why prices could ultimately come down given what's happening in the energy complex.
I think we're in a interesting, I don't know what call it a predicament, but an interesting aspect of this is usually they say the cure for high prices is high prices, right? If oil shoots up higher, then with more producers bringing production online, and then that'll bring the price down. But we see the Labor Department reporting today that the price of keeping someone employed is up at least 4% on last year. We also have rising material costs and input costs for oil producers. Is this discouraging them from actually ramping up production again?
I don't think so, and it depends on the producer. Not to get into too fancy or technical data, but we have in our industry something we call drilled, uncompleted wells, and there's an inventory of wells throughout the United States that were already drilled but not completed. That number has been over 5,000 for a long time. It's down to 4,600. Your viewers can think of it as inventory. There were more than 200 completions in December. This means that people are basically making the wells produce oil, natural gas, and liquids. I think that, as you said earlier, higher prices drive production. If you make widgets and the price for widgets goes up, you probably want to try to make more of them. I think that production in the United States was at about 12.3 million barrels a day going into the pandemic, and then sort of stopped and dropped. But we were on a trajectory headed to, more like 13 or 14 million barrels a day. The country's capable of producing that, and there are elements within OPEC and OPEC Plus that can increase production too. So I think that the price shock now, I just don't see it as sustainable.
Any idea on, I don't want to pin you down on anything, but if we're going to go to $120 a barrel and then you think it could start coming down maybe soon after that, well, where are we going to settle, do you feel?
I had made a call kind of a few months back that year-end 22, we'd probably be back down to the low 60s. EIA is sticking to a forecast around there as well. I'm not sure. I think it can come down fairly quickly. Keep in mind how volatile any kind of commodity is. The annual volatility is very high. So as quickly as prices can spike, particularly with tensions in Europe, Ukraine, they can move back very quickly as well. I'm still thinking that if our production can head to 12, 13 million barrels a day in the United States on the track it was headed in 2019, we could wind up back in the low 60s. I just don't know when.
That would give the American consumer some rest. But anyway, Tom, great to see you. Tom McNulty of TJ McNulty and Company. Really appreciate it. Thank you so much.
Great to see you. Thanks a lot. Take care.
Despite Tom McNulty's optimism on more oil production on the horizon, a federal judge has just rejected a plan to use millions of acres in the Gulf of Mexico for offshore drilling. He said the Biden administration didn't take into account the lease's effect on the climate. Environmental groups praised the ruling today. They said it gives Biden a chance to follow through on his campaign promise to stop offshore leasing in federal waters. Now, the proposed lease sale goes back to the Interior Department so it can decide what to do next. A lot of the workforce still hasn't returned to the office in person. That's left office buildings across the United States less occupied, to say the least. Now, landlords and business owners are offering different types of perks in hopes to lure people back to the office. NTD's Phil Zoe has the details.
No contact? No problem. Buildings and businesses are offering all types of amenities to attract workers back to the office. One of the biggest landlords in New York City, Vornado, is offering free contactless food delivery at over 30 of its prime Manhattan properties. That takes care of food, but what about commuting? Jerry Skillett founded the second largest parking company in America, Citizens Parking, reaching $1 billion in annual revenue. After selling that business, he started Spaces USA, offering contactless parking across the U.S.
You can enter, park, pay, and exit a gated parking facility by utilizing your phone.
You don't need an app. Just dial a number and set up the payment with a code that corresponds to the parking spot.
Obviously, you don't have to touch anything, but even more so, you can do that from inside the security of your car without rolling the window down or anything.
But it's not just the drivers who appreciate it.
But the garage owners really love it because it replaces a system that is very, very expensive.
Saving up to $500,000 for parking equipment, according to Skillett. But what exactly will workers find when they finally return to the office?
We're going to be introducing larger spaces per person larger meterage or square footage per person.
Robert Chmielewski of ShareSpace, which is like an Airbnb for offices, says in order to promote flexibility and more freedom, some workers won't have assigned desks anymore.
You don't have a fixed desk, and no team has a fixed space in that office. You can use an open space for a monthly project, but you can also use ad hoc private meeting rooms and private offices whenever you want.
Mark Batesh over at Visual Lease says that makes sense. He manages 500,000 commercial leases for over 1,000 companies.
You know what they're doing? They're not closing, but they're shrinking. So they're going from 20,000 feet to 10,000 feet. They're going from 4 floors in a building to 2 floors in a building.
Batesh says many companies are not ready to give up on their spaces just yet, even if they're mostly empty.
Because there's so much energy that goes into creating a lease and moving in and fitting out the space and all that. And then after the fact, people sort of lose track of everything they did to get there.
Ryan Reifert is an attorney out in Texas representing many office landlords.
Not every business wants all of their employees to come back.
He says some landlords would rather cut their losses. They're not a big fan of hybrid work.
They want good, long-term, stable tenants. They don't want tenants who are kind of teetering on the edge of bankruptcy, or tenants who are going to downsize their workforce by half and say, hey, I don't need this space anymore.
Some buildings are offering the newest air filtration system, fancier office chairs, and lenient bring your pet to work policies. Phil Zhou, NTD News, New York.
Car makers have been the ones making the headlines amid the current shortage of microchips. But run-of-the-mill household goods are feeling the crunch too. Today, Electrolux saying that supply chain problems are keeping it from keeping customers satisfied. Electrolux is Europe's biggest maker of fridges, washing machines, and other household appliances. Its profits tumbled last quarter to only a third of the year before. Now it says supply chain problems will continue to hamper its ability to meet customer demand, but the firm thinks price increases can offset at least some of its soaring costs. Back in the U.S., but still facing the same problem, the House of Representatives has unveiled a bill that Democrats say would increase U.S. semiconductor manufacturing and give the U.S. a leg up in its race against China. But why is China considered a threat anyway, given most of the advanced chips are made in Taiwan? NTD's Chen Wu explains.
Lawmakers are trying to find ways to ease the shortage of semiconductor chips in the United States. They're an essential part of electronic devices.
Everything from airplanes and appliances to automobiles depend on these chips that really represent the electronic brains of modern products.
Vice President of the Information Technology and Innovation Foundation, Stephen Ezel, says the semiconductor industry is crucial to the U.S. economy.
As a $200 billion industry, it supports 280,000 U.S. jobs directly, another 1.6 million jobs when you consider downstream effects.
U.S. firms are the global leaders in chip design and development, accounting for almost half of the global market share. But most of the chips are made outside the United States.
America's share of global semiconductor fabrication has declined from 37% in 1990 to 12% today. That makes the United States dependent on other nations for its chip supply.
But today, 75% of the production takes place in East Asia. 90% of the most advanced chips are made in Taiwan. China is doing everything it can to take over the global market, so they can try to outcompete the rest of us.
So what makes China the major semiconductor competitor? Ezel says first is Beijing's Made in China 2025 strategy. It aims to replace the U.S. and other foreign exports and domestically manufacture 70% of the chips it uses by 2030.
This is damaging because this is not the way the international trade system is supposed to work. Countries are supposed to welcome trade and production based on comparative advantage, not absolute advantage.
Second is China's massive industrial subsidies, which hurt other global competitors in the industry.
So if the basis of how China is trying to compete is not on private enterprise-led, rules-governed, market-based terms, then it can be very damaging to other competitors across the ecosystem.
The third reason is national security.
Capabilities of semiconductors have a very significant influence on the capabilities of military weapons and platforms. It's concerning is to the extent which China is using these technologies as part of its military civil fusion program.
The military civil fusion strategy is a plan that seeks to integrate private sector innovations into the Chinese military. In order to keep the U.S. technological edge amid China's threat, the House recently introduced a nearly 3,000-page bill. It aims to strengthen the supply chain and invest in American manufacturing and scientific research and technology, securing global competitiveness. Most importantly, it includes $52 billion in semiconductor production subsidies to boost domestic chip production. The Senate passed its version of the bill last summer with bipartisan support. But for the House bill, there are still some disagreements. Our Washington, D.C. correspondent Melina Weiskup says, for one, Republicans are concerned with the timing.
Democrats are pushing through bills rather quickly and that they don't get a chance to actually do debate, research, and have a prolonged period of time to look into the bill.
Plus, some Republicans are disappointed the final version didn't include action to further prevent intellectual property theft by Chinese Communist Party spies. So what is the next step?
It's going to take at least until next week before they can actually get something through.
Weiskup said the bill is expected to pass. Then it'll have to go back to the Senate for another vote before it can reach Biden's desk. Chenny Wu, NTD News.
With that, we're going to take a quick break, but still to come. The German car maker Daimler is getting a new name. What will it be called and why the change? And Apple is offering new advice on how to keep you safe. This after concerns as Airtag is being used to track people. That and much more coming up on NTD Business.
Hello, I'm Mike Lindell, CEO of MyPillow. Cancel culture has not only affected myself and MyPillow, but also millions of you out there. My employees and I want to personally thank each and every one of you for all your support. At MyPillow, we have hundreds of products now, including my new slippers, bathrobes, sleepwear, and my new beds. We are offering the best products ever for the best prices ever. For example, we have the standard size MyPillows, regularly $69.98, now only $19.98 with your promo code. Or you can get custom fit with my premium queen size MyPillows, regularly $79.98, now just $29.98. Or my king size, regularly $89.98, now just $34.98. So go to mypillow.com now and use the promo code on your screen or call the 1-800 number below to receive these exclusive offers. Thank you and God bless.
At The Nation Speaks, we don't just scratch the surface. We want to go wide and deep. Our viewers come away with a much richer understanding of the issues of the day. We really make a big effort to bring on different voices onto the show. We don't just talk to experts and newsmakers, which of course are extremely important, but we also want to hear from the American people. So the people who are impacted by the policies and issues that we're talking about, because what they have to say is just as important to the national conversation.
Welcome back. For this week's Book Spotlight, we're covering the myth of private equity and what it means for you and your retirement plans. Your pension fund could be using private equity companies to try to boost returns. One of the country's largest funds, the California Public Employees Retirement System, recently said it will invest more of its fund in private equity, up to 13%. That's about $25 billion in pension contributions from working Americans. Private equity is commonly thought of as a riskier investment, but one that can offer better returns than a standard stock and bond portfolio. But Jeffrey Hook, former investment banker and author of The Myth of Private Equity, argues that private equity investments very often underperform the stock market. And the fund risks losing up to 100% of its investment if the company it invests in goes bankrupt. Investment firms lost $1.3 billion in the failed takeover of Toys R Us. So we're delighted to be joined by the author of the book, The Myth of Private Equity, Jeff Hook, now a senior lecturer in finance at Johns Hopkins University, formerly an investment banker, as I mentioned in my intro. Jeff, great to see you. Thanks for coming on.
Pleasure to be here.
Jeff, this is your book. I must say, a great read, and in no way a heavy lift, despite the title or people who may not be familiar with finance per se. I felt I was no expert in private equity getting into the book, but I feel the concepts very well laid out, very easy to understand, and I took a lot away from the book. I have a feeling you wrote this for the regular person to try and have them kind of understand what's happening in this space, if I'm not mistaken. Why do you think it's important for Americans, especially working Americans who are contributing to pensions, to have an idea of what's happening in this space?
Well, there's a couple reasons. Number one, a lot of Americans, as you point out, are in pension plans that have now jumped into the private equity business with both feet, committing hundreds of billions of dollars to the business. And secondly, the government here in the United States just recently allowed 401k plans and other retail investors to put money into private equity. It's a bad idea. It's a bad idea for retail investors as well as institutions.
When you're researching and writing the book, which particular risks or stories stood out to you?
Well, what you see in a lot of the media, the business media, is that private equity is the best investment since sliced bread. All right? Unfortunately, it's not true. The private equity business does not beat the stock market, hasn't done so in the last 15 years. And the fees that investors have to pay to the private equity managers are astounding, 3 or 4% off the top. So you have the unfortunate situation of mediocre returns and very high fees. Not a good place for the investor to be.
How do you see this playing out then? We see CalPERS in California increasing their allocation to private equity. They're not the only fund. How do you see this thing finishing up?
I don't see any changes in the near term. I mean, these institutions, as you pointed out, are under a lot of pressure. The managers of these institutions, these big pension plans, university endowments, they follow a set model that's been established for 15 or 20 years that claims that alternative investments like private equity and hedge funds are just knocking the socks off the competition. It's not true, but you tend to see these big institutions follow one another, chase after history. And so near term, probably no change at all. In fact, last year was a banner year for private equity in terms of the money they raise from these big institutions. And then once they get their claws into the retail investor, average people, you could see the amount of money they control go up significantly. So until there's some real reversal, maybe some intensive government regulations on the claims they make, I don't see too much change happening.
You see retail investors getting exposed to private equity in the future?
Absolutely. A couple of years ago, the government signed a new law or a new regulation that said retail investors, 401k plans could go into private equity. Beforehand, before this regulation was approved, the government had more or less a paternalistic attitude, saying these investments were too complex, too expensive for the average person to understand. But now it's kind of opened up. And if you look at some of the big brokerage firms, they're out, hawking these investments pretty hard.
Wow, incredible. Never thought about it from that perspective. Jeff Hook, author of The Myth of Private Equity. Appreciate it. Thank you.
Thank you very much.
And Apple has released a new personal safety user guide. Comes after growing concerns about the safety of the company's Airtag devices. Airtags are those small button-shaped devices designed to help you locate lost items. But they're reportedly also being used to track people. The guide offers advice to people who are concerned about stalking or harassment. The AirTag section tells people what to do if they get a notification that an AirTag is near them or find one that doesn't belong to them. One woman recently told the BBC that she found an AirTag that doesn't belong to her taped to the inside of her bag. Daimler's getting a new name. From Tuesday, the German car maker will be known as Mercedes-Benz Group. It's after its flagship brand. It's a move the CEO believes could raise the value of the company. One analyst said the rebrand could help the firm persuade investors to see it more like Tesla, especially as Mercedes pursues an electrification strategy to compete with Tesla. Its CEO also gave a hint of where the company's future may lie. He talked up self-driving cars. He said it was a significant potential business opportunity for the future. And the pandemic is still wreaking havoc on almost every business worldwide, including the wedding industry. From shipping delays to increasing costs, here's more on why future brides should plan early when it comes to the big day.
Dresses, smiles, tears, and laughter. Ah, yes. It's the sound of one of the most exciting moments for brides planning their weddings. While this future wife is all smiles, some haven't been so lucky.
The worst part of planning my wedding and leading up to my wedding was the wedding dress.
It took 2021 newlywed Chloe Buckle about 5 months to get her dress, about a month longer than she anticipated.
So I actually picked mine up 2 days before I had to fly out for my wedding.
Since the beginning of the COVID-19 pandemic, worker shortages have disrupted the supply chain, causing shipping delays and low product supply for several items, including wedding dresses.
It goes all the way back, right, to raw material availability. COVID's had its impact worldwide.
The CEO of David's Bridal says his company is changing their supply chain method to keep up with the demand.
We front-loaded a lot of inventory production, a lot of purchases.
And with more couples getting married in the new year, bridal retailers like Winnie Couture are seeing a lot more say yes to the dress.
Now that it's a little more open and people are able to have their big weddings, we're definitely seeing a surge of brides coming in.
And because of this bridal boom, those delays could continue well into 2022, according to the National Bridal Retailers Association. The president of the association says before the pandemic, it would take 5 to 7 months for a bride to get a dress. Now she says she's seeing a 300% increase in shipping times.
The manufacturers and the designers that are creating these beautiful wedding dresses are experiencing supply chain issues.
While there are delays, bridal retailers say they're taking extra steps to make sure brides get their dresses on time and even early. But the advice for newly engaged brides is consistent.
Get out there early.
Right now, there's no time.
It's never too early to find the dress.
That's the latest business updates for this week, I'm afraid. Can still catch NTD Evening News with Stephanie Cox. That's at 6:30 p.m. Eastern, last one before the weekend. For NTD Business, it's all for this week. Thanks so much for watching. Have a great weekend. We'll see you Monday.
Thanks for watching us on YouTube. Did you know YouTube only keeps selective videos on its platform? So if you want to make sure you get the full picture, just subscribe to our newsletter. Go to newsletter.ntd.com and sign up. It's free.